We start, however, today with the jobs report for November. Payrolls slightly better than expected, but the unemployment rate did tick up just a bit. Let's get some reaction from Gus Faucher. He is chief economist at PNC. Did this surprise you? In other words, the preceding report, Gus, was notably soggy, probably reflecting, soggy the right word, the effect of hurricanes and other storms as well as that Boeing strike. So was this a bounce back, or is this sort of what we should probably be expecting as we move into 2025, these kinds of reports?
You know, we've seen job growth over the past 3 months of about 170,000 on average. That's about what the economy can create given growth in the labor force. So when you look at the last 3 months in context, the weak October, but then the rebound in November, I think it's consistent with a job market that is in good shape. Businesses are hiring and wages are going up. So consumers are in good shape as well.
Let's talk a little bit about the future of the labor market under a new administration that may be deporting tens of thousands of individuals who are here in an undocumented status. What effect might a crackdown on not only illegal or undocumented immigration, but immigration more broadly have on the labor market?
A lot of the job growth that we have seen since the recovery from the pandemic has come from migrants, immigrants into the labor force. So those people come to the United States, they look for jobs. Given the tight labor market, they're able to find them. And so I think that if we see a crackdown on immigration, if we see deportations, that means slower job growth going forward. We just don't have enough native-born Americans to fill the jobs that we're creating in the U.S. economy. So immigrants have been a key source of labor force growth for the U.S., and we would see weaker labor force growth, weaker job growth if we have fewer immigrants coming into the country.
So not only a crackdown on those so-called illegal immigrants, but potentially a reduction in the number of immigrants coming to the country legally would have a sort of slowing effect on job growth.
That's right. And, you know, before the pandemic, we were seeing job growth, let's say underlying job growth of 125,000 or 150,000 per month. Now it's closer to 150,000 to 175,000 because of stronger immigration levels. And so
if there is reduced immigration and it is harder to fill the jobs, is that in and of itself potentially inflationary because you'll have to pay more to attract and retain workers?
At least in the beginning, I think it would be inflationary. I think you have immigrants who are in jobs that pay, high wages. Less skilled workers, that's less of a concern. But for skilled workers, we're going to have fewer people in those occupations. Businesses will have to raise their pay in order to attract them. So that does hold the potential to be inflationary, at least, over the first couple of years of that policy.
And Gus, I think it's important to highlight that what we're talking about is if we get into next year and we start to see a slowdown in the monthly rate of job growth, we may not know if that's from a change in immigration or if that's from an actual slowdown in the labor market.
Well, what we can do is we can look at labor force growth. We get that number from the Bureau of Labor Statistics, the labor force participation rate. So that will give us some sense of whether the slowing in job growth is due to business demand cutting back on labor or a shortage of labor. And also, we might expect to see the unemployment rate actually move lower if we see fewer immigrants coming into the workforce, and that would put downward pressure on the unemployment rate while putting upward pressure on wages.
Yeah.
What do you see for the economy next year, and specifically for the trajectory of interest rates and how the Fed may process incoming data? What are you looking for in terms of rate cuts, for example?
Well, we're in a very good place with the U.S. economy right now. We have a solid labor market. Consumer spending growth is good. Household wealth is up, and so that's supporting spending, particularly by upper-income consumers. I think that we see that the Fed will cut in 2025, but we're looking at a slower pace now than maybe we were a couple of months ago. Wage growth in the November jobs report was pretty good. We have seen a little bit higher inflation numbers, and so that may mean that the Fed has a little more leeway to hold off on rate cuts while the economy will still remain strong in order to make sure that inflation gets back to that 2% objective.
All right, Gus, thank you so much. Great, as always, to see you. Enjoyed it. Gus Faucher, Chief Economist.